Everyone is obsessed with NVIDIA, but the $5 trillion giant is no longer where the fastest gains are hidden. In 2026, the AI goldmine has moved. The easy money from the initial chip boom has been made. And the smart money is now flowing into the infrastructure supercycle. Today, I'm revealing 3 stocks quietly dominating the next phase of AI, including one company that controls the cooling systems for the world's largest cloud providers and is currently being eyed for S&P 500 inclusion. By the end of this video, you'll understand why the smart money is fleeing general AI stocks and moving into what I call the custom era. I'll show you why a boring industrial company and a hidden networking giant are the real keys to the 2026 bull run. One of these stocks is currently trading at a PE ratio 4 times lower than NVIDIA, despite being the only company capable of making the specific memory chips AI needs to function. If you miss this shift, you're investing in the past. The first major player in this shift is Marvell Technology. We are officially moving from the era of off-the-shelf GPUs to the era of custom ASICs. Big tech giants like Amazon, Google, and Microsoft are tired of paying the NVIDIA tax and waiting in line for chips. They want bespoke engines designed specifically for their own internal AI models. Marvell has already secured 12 major custom design wins with the top 4 US hyperscalers. Their recent acquisition of Celestial AI has also positioned them to dominate the next big bottleneck: energy-efficient interconnects. Marvell is the silent partner in the room. While Broadcom gets the headlines for Google's TPU, Marvell is quietly winning the custom silicon race for the rest of the industry. As these tech giants try to unplug from NVIDIA's high costs, Marvell is the one handing them the cord. But even the most advanced custom chip is a paperweight without the right fuel. That brings us to our second stock, the memory monopoly, Micron Technology. In 2026, you simply cannot run a high-end AI processor without high-bandwidth memory. Whether it's NVIDIA's Blackwell or the next-generation Rubin architecture, they all require Micron's HBM3E and HBM4 chips to function. The supply crunch is real. Analysts have recently hiked price targets for Micron as high as $450 because their production capacity for the entire year of 2026 is already fully booked. Earnings are projected to jump a staggering 440% this year alone. Most investors still treat Micron like a boring, cyclical RAM company. In reality, it is a high-margin AI bottleneck. With a forward PE sitting near 11, it is the ultimate growth at a reasonable price play in a sea of overvalued tech. Wait, there is a massive problem no one is talking about. AI chips are now getting so hot they are literally melting traditional data centers. In 2026, the bottleneck isn't just the chip itself, it's the power grid and the refrigerator. If you can't cool the chip, it doesn't matter how fast it is, it will throttle and fail. This next company owns the cooling monopoly. Vertiv Holdings is the thermal giant of the AI world. NVIDIA's newest chips push power limits well beyond 1,000 watts, which means traditional air conditioning is no longer an option. Liquid cooling is now a mandatory requirement. Vertiv just introduced new modular liquid cooling systems that actually reduce time to token by 50% for AI developers. Major banks like Barclays and RBC have been raising their price targets this week, citing earnings estimates far above the general Wall Street consensus. Vertiv isn't a flashy software company. It's a rugged industrial stock, but it is the only company capable of scaling the physical AI factories that big tech is building right now. When you look at the numbers, the strategy becomes clear. If you compare the forward PE ratios, NVIDIA is priced for perfection. Meanwhile, these 3 infrastructure plays offer massive earnings growth at a fraction of the cost. Marvell gives you the custom brain, Micron gives you the high-speed fuel, and Vertiv gives you the physical housing and cooling. The play here isn't necessarily to dump your NVIDIA shares, but to surround them. By diversifying into the physical and custom layers of the AI stack, you protect yourself from a hardware slowdown while capturing the massive spending of the infrastructure supercycle. The 2023 to 2025 AI race was about who could build the best model. 2026 is about who can run those models at scale without burning down the power grid. These 3 stocks are the ones making that possible. I'm currently tracking one hidden microcap in the AI nuclear energy space that could be the final piece of this puzzle. If you want that deep dive, hit the subscribe button so you don't miss it. Which of these three is your top pick for 2026? Let me know in the comments.